Titman, the CEO of Swyftx, the man whose summer report on digital assets will be the favourite blockbuster in Portsea on the beaches, Stephen King. Come on up for the Commissioner at the Productivity Commission, Grant Augustin, the Managing Director of SISS Data Services, Julie Abramson, the Commissioner at the Productivity Commission, and nothing compares to her, Sinead Lynch, partner at Gadens Lawyers. Put your hands together for our panel.
Thank you, Simon. Well, that was some introduction. I love it. Good afternoon, everyone. And it's great to see lots of people here for this very timely and thought-provoking discussion that we're going to have on Australia's productivity blind spot. What do we see as the drivers of Australia's long-term success? For anyone that doesn't know me, Sinead Lynch, I'm a partner at law firm Gadens, a tech and data partner, and yes, another lawyer talking about economics, and digital asset finance, as well as digital transformation. I want to start, because I want to get straight into it. We don't have a lot of time. We've got to set the scene, really. I think it's fair to say our economy is not just functioning as it should, or we're not growing at the rate that we used to. The budget's in structural deficit. Our demand for services is growing, but our capacity to fund that extra spending seems to be going the other way. Homes are more expensive. Young Australians are getting distraught. And slowdown in productivity growth may be to blame. We've obviously heard a lot from the government in terms of their recent economic reform roundtables with regard to the ways that they want to see the productivity boosts and benefits and how we need to harness digital technology and digital innovation to be able to boost productivity. But Jason, I want to go to you first. Do we have a blind spot when we look at the economic value of digital finance and digital asset innovation in particular? When we look at, there was a recent report by the Digital Finance CRC, which highlighted that digital finance innovation could, particularly in the markets and cross-border payments sector, could unlock up to 19 billion a year, about 1% of GDP in Australia. What do you see in terms of that investment in digital finance technology? And what are your thoughts? What do we need to do to accelerate, to unlock those gains?
I think we've got to acknowledge, particularly what we're all here for in the financial services sector, that productivity in Australia has gone backwards in the last 10 years in financial services particularly. You know, I'd certainly like to congratulate the Productivity Commission. We've got some of the commissioners here today for what they've done, talked about the taxation and regulation, but I don't think it's gone far enough. And there's probably a few areas that I'd like to sort of touch on. The other thing is I think productivity has got to be led from the top. This has got to be led from our politicians. If I talk about the industry that I'm acutely involved in, being the digital assets, if we look at what the Trump administration has done now, whether you like Trump or not, or support any of his policies, he's done about 4 things in terms of it, and there's been a 180-degree shift since that administration has come in just for digital assets. But the point is, and there's other things that he's doing, is getting that economy going. It's about making America crypto capital of the world, bringing in a couple of their acts, their Genius, their Clarity Act, removing a blockage that was the head of the SEC, and also forming a task force. You know, they're some of the things we need to do. In terms of Australia, and I think, you know, the taxation point is one that I would touch on. Lots of reform. It's not sexy, so getting buy-in on that, but you know, there's simple things that you can do, and I think once again, if I look at it in the crypto industry and digital assets, to me it's pretty simple. At the moment, we've got a system whereby we're taxing you for moving from crypto to crypto. We're taxing you if you move from crypto to fiat. Crypto offers a lot of opportunity for payments and actual real-world use cases. We're moving beyond it being a speculative asset class. But we've got some policy in there where you can't touch on it. So, like I said, I certainly commend what the Commission has done. I would have liked to have seen it address blockchain more, and there's more opportunities for that to go. But 2 other areas of productivity. I think that with blockchain and digital asset technology, it can become a 5th major economic pillar of Australia. At the moment, we've got agriculture, we've got our mining, our education and tourism. Three of those 4 are virtually going nowhere at the moment. So we're talking about unlocking productivity. Australia, is pretty stable politically, a great environment, climate, etc., and many things we've got a lot to be thankful for. And quite frankly, in the main, very good internet, Wi-Fi, etc. So we can attract the best talent from around the world in the digital economy. Agriculture and mining are struggling with productivity, particularly with everything we've got ESG and the likes that's struggling. Education, now that the federal government have started to question about numbers of migrants and we start to put limits on universities in terms of funding, etc. Those three are going to struggle for productivity. There's no point talking about those industries unless there's some fundamental changes there. And tourism ebbs and flows. So as I say, the digital economy and financial services has a real opportunity if we can get some unlock there. The other side of things is this regulation that we can certainly do a lot more in terms of it, but some simple sides of things that we can do. And then payments, the last thing that I'll finish on, and there was some good initiative. Once again, I'm not sure it went far enough, but I think regulators, they do have a tough job, and Scott Farrell used an analogy earlier on. In Australia, we've got more than one referee on the field. We've got a number of regulators out there, and we've got to work out whether or not, in Australia, we want, in terms of productivity, we want our regulators to be kind of coaches, or whether we want to enforce the law to the absolute letter of the law. And I think that's not easy for anybody to do. It's not an easy shift, but what I'm talking about to get productivity going, and that's why I referenced Trump earlier, is you've got to get some things led from the top. But in terms of payments, really quickly, and we touched on the stable coins and other areas, in the Swift payments network, so we all have had transfers done through that network. There's 13 steps and 6 or 7 intermediaries that are involved in that. Crypto, as you know, it's peer-to-peer. I'm transferring money to you, you're transferring money to somebody else. There's 2 steps in it. It can be done in a fraction of a second and for a fraction of a cent. It's 5 to 8.5% for stuff going through the Swift network. Now that is international, so it's not as easy for us to entirely change here in Australia. But there's some of the practical things that I think can really be done to help lift productivity, in addition to what we're already addressing.
Thanks, Jason. I think some meaningful practical recommendations coming in that discussion. Stephen, can I turn to you? You've been tasked with developing some recommendations to support meaningful reforms also to boosting productivity. Do you agree with Jason? Are we measuring productivity wrongly? Should we be looking at different ways? And do you want to talk us through the outputs from your recent interim report in harnessing data and digital technology and your thoughts from that?
Yeah, so let me reinforce some of what Jason was saying. So why are we here? Why does this matter? We've had a lost decade of productivity. So last 50 years, productivity has gone up by about 1.6% per year. It's basically gone nowhere in the last decade. Why does that matter? Because living standards are tied to labour productivity. And if you look at the span since the post-Second World War, and you track real wages against labour productivity, they go absolutely up together. So you want to get living standards up for ordinary Australians, you have to focus on labour productivity, and for the last decade, it's gone nowhere. So how do we turn it around? Well, we know what drives productivity. And to pick up Jason's point, it's not more regulation. We know that technology and adopting technology, deploying technology, rolling technology through our economy is the historic, essentially the only way to get long-term productivity growth. Now, we're at a turning point here because we have new technology in the forms of the current versions of AI. AI has been around for a long time. The term goes back to about 1956, and there's been different variants of it. So for those of you who think AI was invented about 2 years ago with ChatGPT, sorry, you've got another 48 years of history behind that. But we've got to the point where the technology is suddenly on everyone's mind and they can see the benefits of it through the large language models. So what sort of gain can we get there? Well, I'll put it in a bit of historic perspective. From 2004 to about 2014, we had the internet and mobile phones really making that productivity impact on Australia. Again, They were both technologies that had been there earlier on, but they started being rolled out, deployed, diffused, and making an impact. 2004 to 2014, about 3.1% of the growth in our economy over that decade was due to those two technologies together. Now, the Productivity Commission has taken a very conservative approach. We've taken it, everyone's got their own guesses as to where AI is going to lead our economy. We deliberately went to the one from a guy called Daron Acemoglu. He's a Nobel Prize winner from MIT. He's also skeptical about AI. So we took his approach, we adapted it to the Australian numbers. And even the most pessimistic approach gave us growth of around 4.3% of GDP. So more than the internet and mobile phones together. About 116 billion. About 2 orders of magnitude bigger than anything else you will find in the policy reform space around productivity. Current population, about $4,300 per head, per person, per year, every year. So start in a decade and say that's the sort of prize that we're looking at here. So, how can we kill it? Well, we can kill it by saying this is something we have to fear. Had a nice panel I was moderating the other day with a computer scientist on it. And the computer scientist said, you know, those who have fear about AI, those who say the robots are coming for us, they fall into 3 categories. Either they're not computer scientists, so they don't know what they're talking about, or they're people trying to make a reputation as being Dr. Doom, Jeff Hinton, who's a Nobel Prize winning computer scientist. If you want to find out the doom scrollers, he's the one. Or they're people trying to raise money and they want to oversell AI and say how this is the future, we've got to win and so on. If they're not in those 3 categories, then we're not running the doomsday scenario. This is an opportunity for Australia. We need to make sure we respond appropriately, and that's what the Productivity Commission's recommended. Look at our current laws, see that they're fit for purpose for AI, see that our regulators are fit for purpose for AI, see that they've got the skills, that they've got the resources, and then let's go for it.
And Stephen, just to follow up on that, following on from what Jason talked in terms of digital finance, would you see a similar position? So obviously the report was very focused on AI and structural reforms needed, both from a regulatory perspective and otherwise. Would you see that full approach and that viewpoint also crossing into digital finance and digital innovation or digital transformation more broadly?
Yeah, so it's both digital transformation broadly, but yes, finance is a key sector of the Australian economy, and it's an area where we need to have AI. To understand the importance of finance, let's step back a bit again and understand that the feedstock of AI is data. Now, people will have different views on the consumer data right and whether it's freed up data flows enough or whether it's been too expensive. But there was a reason you start in finance when you're thinking about data flows, because finance has the data that is literally the lifeblood of our economy. And we need to make sure that that data is available, is moving through the economy so that it can create the feedstock for our AI applications. So we want to be looking back in 10 years and saying, well, thank goodness we set up the systems back around 2025 to make sure that the financial data is moving, that the products and the innovation can occur, so that we took the AI opportunity, and yeah, hopefully we'll be looking back and saying, and guess what, we're now a leader internationally in finance.
Well, that discussion on data, I think, leads me quite nicely to Grant. You, in SISS Data Services, you provide one of Australia's leading CDR open banking platforms with ACSISS. Are we underestimating the productivity gains from embracing and investing in open banking? And taking Stephen's point on data, where do you see the benefits and the gains in that sense?
Yeah, look, we do. And let me start by, we often say to our team that if AI is the engine, data's the fuel, okay, and it's going to power it going forward. For the consumer data right, we won't go into too much of its history, but my position is we've got almost a 2-speed economy with the consumer data right. On the consumer data side, it's slow and it's hard, and I won't go into the reasons. On the business side, we're really starting to see that acceleration taking up because we got the policy settings right. And just at a high level, you can share business data with a third party and it can flow around the ecosystem. I want to take a slightly different side of this, angle to this about the productivity and the practical side. Often when I'm sitting in the audience, I'm hearing all these words, how do I relate to that? So I'm going to take you through a couple of sectors, one sector in particular, accounting. And I'm an accountant, so just bear with me, please, I'm sorry. But how data and flowing through can increase productivity. So just recently, we did a survey with a number of accountants and we asked them, what is the cost to you in hours about not having data available to you? And quite conservatively, they said, we spend about an hour each year per client getting missing bank statements. And we've all been in business and we've all had an accountant chase that bank statement data. Yes, my accountant probably chases me for more than an hour. So let's imagine a world now with CDR where that data is flowing through. Now, on average, an accounting firm has about 150 to 200 clients, okay? They spend an hour each year per client finding that data. There's over 25,000 accountants and bookkeepers. There's a lot more. Just imagine if that hour, or all that hours that they spent finding data, they just started to give better advice to business. And at a charge-out rate of $150 or $200 per hour, we just added $500 million to the economy and help businesses be more productive and get better outcomes. That's all about data flowing through. What role does AI play? I could spend the whole day talking about how that can help businesses, but we call it the multiplier effect. So when you've got the data and you're sharing it, the benefits with AI just multiply. So yeah, that's one of the key things we see with the CDR. We see it really starting to take off. And I think the productivity gains, and you look at that accounting example, just a small one of how we're going to get the productivity gains. The other one, a slightly different angle, is we see with business lending. So if I'm a small business and I want to get finance, we've all probably been down that path where we've had to get statements and send data. What amazes me in the last 12 months now is the tech that's come in, now that we can share data, and getting real lending decisions based on 100% of cash flow and CDR data to businesses instantly, so they can grow their business, so they can employ more staff, they can buy more stock. Before that would take weeks and months. And if I'm a tradie, I don't want to spend that time getting paperwork done. I want to submit my data, get the right advice. Yes, there's AI behind that. Don't ask me how. But the outcome is I get a loan really quick and I get to expand my business. So I really do support what we're hearing here. With regulation, just my last point, we are long-suffering CDR people when it comes to legislation. And if you take a step back, it was a tough sell. We just went and told the 4 big banks to spend hundreds of millions of dollars that you can't charge for to help a consumer. So well done to everyone getting it through. We had a lot of problems getting support, but I would say to everyone, it can be overcome. If you bring banks on the journey and other sectors like payments, bring the people on the journey, have those conversations, even the difficult ones, but you can get to a place where everybody wins. And I think as a community, open banking and the CDR needs to take a step back and be proud of that. They weren't easy conversations, but they were good ones to have, and the productivity gains are going to be great going forward.
Great. So we're looking at open banking, we're looking at digital finance. There's a thread here in terms of data as being one of the drivers for success in that context. Julie, I want to turn to you because obviously when we look at data access and we look at data governance in particular, there's a growing tension between, and we've seen this between outcome-based regulation, because regulatory reforms were one of the key things that the Productivity Commission has suggested as a structural reform in terms of lightening the current burdensome compliance costs for all businesses, particularly around access to data and access to new technology. But if there's a tension between outcome-based regulation, whether it's for AI or data or otherwise, and prescriptive compliance, especially when we think about data governance, what is the role, in your view, that privacy legislation should play here? Because there's been a lot of commentary publicly about the way in which the PC has suggested in the interim report this should be done. Can you talk us through that alternate compliance parallel pathway that you've suggested, and what are your thinking and thoughts in relation to that area?
Thank you very much. But isn't it interesting, because I always feel like I'm the handbrake. So we've gone through all the people who want to do stuff, and we're the lawyers.
We're the
sitting at
lawyers.
the end.
That's it.
That's exactly
Regulatory
right.
reform,
That's right.
unfortunately.
Well, it's a difficult public policy, and just one of the things was that it was really apparent when we started our work, and Stephen has been working in data for quite a long time, that it was really necessary to have legal skills as well, because it's about the regulatory world. And one of the sort of the biggest acts that is important in terms of the data flow, and probably a lot of people in this room encounter it all the time, is privacy legislation. And one of our concerns was, we talk about, you've raised the tension, we talk about outcomes, but what happens is that over time things become very prescriptive. And what do we do as lawyers? We say to clients, well, you need to have business certainty, here are all the things that you need to do. And what we've found over time with privacy is we've got two very difficult problems. We know the consent and notification which the Act requires. Firstly, sometimes we're asking for consent when it's not needed, but the consumers get consent fatigue. And think about it from your own perspective. I mean, I'm as guilty as anyone. I just go click, click, click because I want the service. So what good is that doing in terms of consumers? But we know at the same time there's a trust issue in terms of data. So to free up the data pathways that we all see for the big productivity gains, people have to be confident how their data's been used. And every time there's a data breach, we lose consumer confidence. So when we talked about outcomes, we said, well, what really matters to the consumer and to the business? Why have I got this data? What am I going to do with this data? And how am I holding that data? So when we talk about outcomes, that's what we mean. We don't mean all of these not all of it's prescriptive, but all of these things, do this, send a consent notice every time you touch the data. Really, people just want those three questions answered. And so that's really what we were driving at.
So the Privacy Act is still safe for a little while.
Well, I don't have a view one way or other about the Privacy Act. But it's a really good point, because this is about trying to balance interests. Privacy really matters because it matters to people to have consent in their data.
And when we think about data, and obviously, you know, it's a really, as I say, common thread, and we look at the data breach incidents and cyber breach incidents that have permeated of late. How do we, Jason, I want to turn to you for this final comment. I'm conscious on our time, but how do we balance innovation with accountability and data use? Because is blockchain a solution? So when we look at some of the issues that we're having around data breach and the scams associated with that, particularly in the financial services sector, what do you think? Is blockchain a potential solution?
I think firstly to acknowledge what Julie said, you know, trust in our organisations, trust in our government has got to be there from the data point of view and the privacy point of view. And you know, that pendulum has swung too far one way, so we've got to get that right. In terms of blockchain, what I find frustrating, and you know, I have come from the traditional finance side of things, but I find it frustrating that there is so many, you know, misaligned arguments that are used in terms of scams and everything around the blockchain, around crypto. It is so easy to trace crypto digital transactions via the blockchain. Not easy to get them back, that's the issue, and that's what a lot of people forget. Once it's sent to the wrong wallet address, that's the problem. But so what I'm saying to is, yeah, blockchain definitely is the new rails on which so many things are happening, and it's going to profoundly change the way in which business, commerce and everything is done. So very traceable, but to that whole point, yeah, we need to be careful around data. We need to be making sure we're doing the best job to ensure consumers understand what data is being there. And I think companies need to readdress basically the data that they're keeping. I mean, we've seen by so many breaches lately, why did they really need that data? We thought it was big data and we needed this and we wanted more and more, and that's to a point. But when it comes to individual consumer data, do we need all of it? And I think that's an area that we really need to be starting to drill down on. And to be honest, business does need government and regulators to force them to rethink that.
Well, you've literally hit the nail on the head in terms of my final question, which is, if we were to look at you know, what the government are doing right now in terms of the economic reform roundtables, what's one piece of advice that you think from your perspective they need to do, and they need to do fast? Is it as you've just said, in terms of looking at reform in the database space. Jason?
Yes, possibly. I think it's leading from the top. You know, they've got to work out which is a pendulum. I've always said, you know, Australia can be the most regulated country in the world. If you want that, that's fine. But you're not going to have the most productive. That's the reality. So you have to be very careful and clear on that. And I don't think a lot of our politicians are. I think they've got to get clarity on the argument. So we have to lead from the top. The politicians particularly need to be leading regulators where we're going, but they've got to be working together. And then we've got to come to some practical areas, because I do think there is too much kind of, you know, we're probably trying to address too many areas. For me, I always love the flywheel analogy, and I think an economy and a country can do the same thing. So don't try and do everything, because we get paralysis by analysis. I think some of the economic roundtables that the government had recently, lots of stuff comes up, we've seen it before, and it just gets paralysis. It's too much. Just pick a couple, get a few wins, pick a couple more. Not easy to pick them, you'll upset a few people, but get it moving.
Yeah. Stephen, final thoughts?
So, yeah.
We've got 2.5 minutes.
All right. Follow the PC's recommendations in our final report, which will be handed off
Good answer, good answer. Well,
the Treasurer in December.
Look, I would say, and I'll focus on CDR here, I think for us it's around certainty, so we need the government to make some decisions. We've heard about nominated rep and other issues there. They just need to give business certainty. Just around the consent, just a quick comment is, get the balance right between informed consent but not making it too hard. But I fully support the CDR consent process. So when a consumer rings our call centre up and says, I previously just had to enter in my username and password, and now I have to go through this whole consent process. And I said, that's because they were screen scraping and sharing your data. That shouldn't happen. It's your data, own it. And I make no apologies for the CDR consent process. Okay, so I'd say just get that balance right.
Julie, final blind spot.
Well, I would never disagree with my learned colleague, Stephen, but I think sometimes, and I really want to pick up on something that Jason said, is sometimes it's about saying to government, we don't think you should do things, and that's a very classic example for us with AI regulation, which Stephen stepped through. So that's another important message.
Thank you for that. I think we have some time for Q&A. Are there any questions in the audience that anyone would like to ask any of the panelists? Someone must have a final question, surely.
This is your chance to take your shot. Come on, guys.
And if you don't get a question, we're probably not going to turn drinks on afterwards. Is that right, Rehan?
Dan, go.
It's a very quick one, but when are the recommendations coming out?
Happy for me to do the timing, Julie, or?
I think you have the time.
All right.
Go ahead.
So we hand our 5 reports for the 5 pillars to the Treasurer in early December. Under the Productivity Commission Act, government can never hide a Productivity Commission review, so it has to be tabled before Parliament within 25 sitting days. The actual timing is up to the Treasurer. Often governments like getting the report, working out a response so they can table the report and say what they're going to do at the same time, and that makes perfect sense. So it'll probably be in the new year, well, almost certainly be in the new year, and yeah, we look forward to the government accepting and implementing all of our recommendations.
Thanks, Stephen. Any other questions? If not, we might wrap up. Oh, we've got one.
Thanks. I'll take one for the team so we can have drinks. It was mentioned there quite a bit that data is the fuel or the driver of things. Data's been described as the new oil, but more recently as the new plutonium, as in it's very powerful, but very dangerous if not handled correctly. So I'd like to hear from the panel how you reconcile between the power of data, but also making sure the commentary around being over-regulated. So how do you actually reconcile that?
I'll have well, I think this is why we really talk about outcome-focused regulation. It's not just a kind of buzzword that we're using. It's really about, we understand these consumer concerns. They're real. We're consumers as well. So we want to focus on the outcomes to give people that certainty that we talked about. How is my data being collected? How is data about me being collected? What is happening to it? And how are you storing it? So part of the solution for me is making that balance to make sure we're focusing on outcomes.
I'll just quickly add to that. I think where they get the balance right, if we look at business data has been flowing into accounting software for close to 30 years. So it was quite smart for the government to say, let's carve business data out. The risk is lower, not saying risk-free, but it is lower. So that's where working with policymakers to say, okay, business data is fine, but I agree with personal data. It's a different game, and we need to be mindful and careful how we release that and how we treat that data.
Thank you for that. I think maybe just to add my final comment in relation to your question, I think fundamentally, yeah, we're still waiting to see quite a bit in terms of regulatory reform that might be pushed back a little bit more, but I think certainty is certainly something I think a lot of people at this conference I've heard from a regulatory perspective just really need to see some certainty. So maybe a little bit more action from the government in terms of what we need to prioritise for our longer term success across all of these areas. If there are no further questions, can I ask you all to thank our panelists, Jason, Stephen, Grant and Julie. Thank you.